You are listening to The Vocal Technologist. Spoken tech for your ears.
Okay, let's unpack this. We've got quite a session for you today. From, well, monumental market shifts to some really surprising pivots in how projects are connecting with their communities. Our sources this week are pretty packed, covering everything from big institutional plays to the nuts and bolts of blockchain tech itself.
Yeah, and what's really fascinating, I think, isn't just the single events, but how they all seem to point towards, a maturing ecosystem, a strategic shift, maybe.
Yeah.
It really makes you ask, what does all this mean for how value is actually being created and distributed right now in digital assets?
That's a great way to frame it. And thinking about shifting value, let's kick things off with some huge market moves. Galaxy handled a massive Bitcoin sale, over 80,000 BTC, worth around $9 billion. For a Satoshi-era investor.
Historic, yeah. The largest single BTC transaction by value ever, apparently. A really significant early exit, sounds like, for estate planning.
It is significant, but does that kind of exit signal like confidence that the market can absorb it, or maybe caution from someone who's held for so long finally deciding to de-risk? What's the signal to the institutional world, do you think?
That's a good question. I lean towards confidence, actually. The fact that Galaxy could even do that without causing chaos says a lot about market infrastructure, about liquidity. But it's not just exits, right? We're seeing talent move in. Joseph Chalem used to lead digital asset strategy at BlackRock.
Right, background.
He just joined SharpLink Gaming as co-CEO. And SharpLink, they managed that huge $1.3 billion ETH treasury with Joe Lubin.
So serious capital attracting serious seasoned talent. That definitely underscores the point. And speaking of capital, some companies are actively building huge treasuries. Look at WindTree Therapeutics.
Yeah, the financing news.
Exactly. Over $500 million in equity financing, including a $500 million equity line of credit. And the goal? Specifically to build a massive Binance coin, a BNB treasury.
$500 million
Yeah.
earmarked for BNB. That's not just dipping a toe in. That's a massive specific bet.
It really is. What do you think they're seeing in BNB to make such a commitment?
It has to be a belief in the ecosystem's growth, its utility. They must see BNB as a strategic corporate asset, not just, a speculative hold. It's a calculated corporate move. Now, speaking of calculated moves, let's pivot a bit to pure innovation, the tech driving new efficiencies. Crossmint just rolled out something pretty cool.
Oh, yeah. What's that?
Their unified send API. Basically, it lets developers send funds across any blockchain, one line of code. It handles all the messy stuff, RPCs, AML checks, even gas sponsorship.
Wow. Okay. One line of code for cross-chain. That could seriously lower the barrier for developers, couldn't it?
Absolutely. And making things smarter, more efficient. We're seeing that in lending, too, Aave V4.
Right. They're moving away from the flat borrowing rates, introducing risk premiums.
Exactly. No more one-size-fits-all. Now, the borrowing cost will actually reflect the risk of the collateral you put up. So high-quality stuff like ETH should get cheaper rates. How does that actually make the market better for, you, the participant?
Well, I guess it means your good collateral gets treated better, potentially giving you lower costs or maybe more stable yields. It rewards quality.
Precisely. Incentivizes stronger backing. And for just raw performance, MegaETH is doing some wild stuff.
MegaETH. Tell me more.
They're basically rebuilding the EVM as a real-time layer 2.
Yeah.
The target is, get this, 100,000 transactions per second. Millisecond latency.
100,000 TPS and millisecond latency. Okay, that's basically real time. What kind of apps does that even enable?
Things that were impossible before, right? Like sub-second order book updates, verifiable 3D asset streaming for games, or, the metaverse.
Okay, that changes the game for things like DeFi, gaming. Suddenly stuff that felt like science fiction is technically on the table. But, with all this innovation, there's always the reality check. Not everything takes off immediately. Like that AI token thing from late 2024.
Oh, yeah, that fizzled pretty hard, didn't it? Something like 95% of those projects were just vaporware, pure speculation.
So the hype died down.
The hype did, yes. But the underlying interest in real AI applications in crypto, that's still there. It's just shifted. Now you see, private teams building actual products where crypto adds something unique. Think synthetic stablecoins backed by GPU power, or maybe on-chain access to AI models. Real utility, not just a token label.
Utility over hype, that makes sense. We're seeing a similar evolution in how tokens get distributed too, right? Airdrops aren't the magic bullet they used to be.
Not on their own, no. Just dropping tokens doesn't guarantee a strong community anymore. So the shift is towards maybe more demand-driven ICOs, but data-rich ones, and narrower airdrops focused on incentivized alignment, using analytics, both on-chain and off-chain, to find the real contributors and believers. You kind of have to earn your spot now.
Earning your place. I like that. It feels more sustainable. Okay, and one more strategic play that caught my eye, this catch-up stablecoin thing.
The TLGY SPAC merger. Yeah, that's interesting.
So $360 million SPAC deal, TLGY becomes StablecoinX, and the plan is use that cash to buy and lock up ENA tokens.
Exactly. They're trying to create this kind of MicroStrategy style flywheel, is how it's being described. The idea is ENA goes up, the company's share price goes up, which lets them buy more ENA and so on. It's a leveraged bet on ENA's appreciation.
And they're specifically targeting Korean retail investors with this.
Seems like it, yeah. Korean retail has shown a big appetite for these kinds of digital asset plays, often with pretty high conviction. It's tapping into a known demand center.
Clever market mechanics. Okay, before we wrap, just a quick regulatory note. Dragonfly Ventures.
Right. They confirmed the U.S. government might bring charges over a 2020 investment they made in PepperSec.
PepperSec being the developers behind Tornado Cash.
Yeah, the privacy mixer. It's just a reminder that regulatory scrutiny is always there, especially around tools that touch on anonymity and potential illicit finance concerns. It really highlights that ongoing tension, doesn't it, between privacy tech and regulatory compliance.
Definitely. Okay, so here's where it gets really interesting for you listening in. We've covered a lot about huge wealth moving out, new institutional money and talent coming in, incredible tech pushing the limits. And all this is happening while the market itself seems to be getting smarter, correcting itself on what actually creates long-term value.
So if we zoom out, connect the dots. How will this constant push for, real utility, better risk management, this data-driven way of engaging communities, how will that fundamentally change who even participates in this space? And maybe more importantly, what will define a successful project in the years ahead? Something to chew on until next time.
Spoken Tech for your ears.